Good morning, welcome. I'm Alan Tilley, and I'm very pleased to welcome you today to this webinar. We are planning, or this is the second one we've done, and we will continue through this period. We've got a very good format for you today. Just some words of housekeeping. If you could put yourselves on mute. We will be, there will be a facility for questions and answers. There's a Q&A thing at the bottom. If you have questions, put them in, and our host moderator will handle that. This is being videoed, and we should be able to put it up on the TMA, the EACTP website afterwards. So at this stage, all it leaves me to do is to pass over to Tony Groom, who is the moderator. Tony is one of the founders of TMA in Europe. He was a founder of TMA UK in 2001. He was president of TMA UK in 2002. He's still a member. He was very instrumental in helping chapters set across Europe. So he's been involved for a long time. He is a CTP. So with that, Tony, I will pass over to you and let you handle this and introduce the panelists.
Thank you, Alan, and good morning, everyone. Yes, I was one of the late joiners. I think my CTP number is 20. I'm sure Alan's is probably number 1 or 2. And aren't we fortunate to have a leader in Alan who's sort of helped get both EACTP to where it is and also be instrumental in getting TMA spread throughout Europe. Anyway, welcome to everyone. We've got a fairly full lineup today. We've got some questions with a panel of august, experienced turnaround professionals throughout Europe. I'll introduce them in a minute. Before then, perhaps if I can just sort of set the scene. There's light at the end of the tunnel for those many businesses affected adversely by a year of lockdowns. In boardrooms throughout Europe, the directors have been grappling with what, when, and how the new business landscape will emerge from this lockdown. One thing we can be certain of, many businesses are going to change. Their business models must adapt not only to COVID-related factors, but many others, none the least climate change, Brexit, implications for many major industries, the auto industry, supply chain, the trade disruption, there's political moves, obviously trade barriers going up in some parts of the world, technology change. We're all now buying on loan, so our behaviours are changing. The travel industry has obviously got its huge problems, and now that we're all on Zoom, will we ever return to meeting in face-to-face? I'm sure we will. Change, of course, is good for us as turnaround managers, but we too must adapt to the new landscape. Different ways of finding business, referral sources, different distressed companies to deal with, investors. They've got loaded war chests, SPAC, special purpose acquisition companies are emerging. We're going to see lots of over-leveraged businesses with uncertain payback times for creditors. These are new and untested restructuring times, but guess what? We've got some new restructuring laws to help us, and I'm hoping some of those will emerge during the conversation. So my 3 leading professionals on the panel from Netherlands, Germany and UK are going to help us explore some of their perspective of what's going on, and hopefully will help us identify how to find and seize the opportunities. So perhaps I can invite my panel to join me. So please can I ask you each to introduce yourselves. I'm going to ask you, if you don't mind, Eva, to start off. If you can introduce yourself and tell the audience who you are and a little bit about your company, please.
Yes, many thanks, Tony. So my name is Eva Ringelsbacher, and a warm welcome from my side in this morning. I'm a senior manager at Restructuring Partner, and I'm the head of the office of our office in Frankfurt. I'm a jurist, and I'm working now since 27 years in restructuring, and this is quite a long time. And before I joined as a consultant to work for Restructuring Partner, I was working at Commerzbank as a director in the restructuring department for 20 years. So now I advise companies in a crisis in restructuring cases, and I advise them in financial restructuring, because I know how the bankers think, and I bring this in. Yes, I'm a board member of the German TMA chapter. I'm also a board member of TMA Europe, and I have since this year the honor to be a member of the TMA Global Board of Trustees, and I'm looking forward to our panel.
Well, thank you very much indeed, Eva, and welcome. Kees, perhaps we can invite you, and perhaps you can tell us what life is like in Netherlands now that, of course, you've become the premier stock exchange in Europe.
Yeah, we will be, of course. Thank you for that I'm able to be here in this meeting, in this webinar. My name is Kees Lieven. I'm one of the founding partners of Kruger. Kruger is established in 1988. And we are fully active every day with about 20-25 consultants and 10-15 interim managers to help a lot of medium-sized companies in problems in Holland. And I heard that my back screen is mirrored, but I tried to put it the good way around. I didn't succeed, but so is everything in Holland. We do everything the other way around, so it's also okay now.
It certainly works, Kees. David, you're a colleague of mine in the UK. You've got a different perspective because you very much have a European practice at BM&T. Perhaps you can introduce yourself and BM&T.
Yeah, thank you, Tony, and good morning, everybody. I'm David Bryan, co-founder of BM&T with Alan, and we are a boutique international turnaround and restructuring firm. My background is as an accountant in industry, many years in a public company M&A team, often buying distressed businesses, and that included several years living and working in the US. After that, I went to work for an American turnaround firm before starting BM&T with Alan in 2008. We are a London-based firm, but we have a partner network around Europe under the European Restructuring Solutions brand, ERS, with partner firms in France, Germany, Spain, Italy, and Romania. And we also own an interim management network, Interim Connect, with around 1,600 interims as members. I've personally been in TMA since 2005, I think. I was on the board of the UK chapter for almost 10 years. And I'm currently president of TMA Europe. I'm also a European CTP, and since we were talking about numbers earlier, I think I was number 5, so to be admitted. Okay, well, looking forward to the event.
Thank you, David. Clearly, TMA runs through your blood. So for myself, I think turnaround and TMA runs through mine. Certainly, I was one of those with David helping. And indeed Alan helping form TMA in UK. At the time I was working as a company doctor, having left the army in 1989, and I spent the last 30 years as a turnaround manager, although more recently regard myself as an investor looking to buy up small companies. Unlike the rest of the panel, I really deal with small companies, so I see lots of small companies rather than a few large companies. So I perhaps bring a micro perspective to the panel. Anyway, what we've got is some questions that we've pre-prepared, really to kick off the what we hope will be an engaging Q&A session, and therefore we're very much hoping everyone will submit questions using the Q&A feature on the webinar. I will monitor them and I will ask your questions. If you're happy to disclose your name, please give it. I will ask your questions of the panel and get their responses. But to kick off, we've got a few pre-prepared ones. So COVID-19 has wreaked havoc on many industries, and we've heard of many well-established companies being declared bankrupt or at least being restructured. Eva, please can you kick off with your views on those industries that need our input and those where we as turnaround specialists can make the greatest impact?
Sure. So my observation in the current situation, we see a lot of total shutdowns in some cases, like tourism, restaurants, retail, and the question is, what happened there? When will they start again? And nevertheless, beside this economic crisis, we see in Germany, for example, only a few restructuring cases and nearly nothing in insolvency. So the question is, when will this wave come? The reason that we didn't see such a wave is there are enormous sums of corona loans, of state aid, short-time working, and so on and so on. So the banks make deferral, suspension of loans. And the industries who are affected are really affected by operational shutdown. And these are the cases we see at the moment.
And Eva, are you when you're saying, are you actually busy dealing with anything in particular at the moment you're able to share with us?
Yes, for example, we advise a travel agency at the moment, and they are really hit by the lockdown, and we have to take various scenarios into account, because at the moment it's very difficult to set up a business planning for the next 3 years for this agency. So we have to take in account what about the vaccination rates? When will people start traveling? When comes the desire for traveling back? But also with respect to this travel agency, it's an ecological discussion we have to take in mind. So is it, will they come back and fly away with a plane for only 1 weekend or so, or short-term traveling? And this is at the moment, to set up this planning for this agency, like looking in a crystal ball.
I can imagine, and I'm hoping we'll come back to some of this, because I think there's, you know, there's going to be natural concern about some game playing, some political leverage, where the countries can fly from one to another. Certainly we in UK are seeing some countries that are desperately keen to get UK tourists to go to them, but we'll come back to it. Kees, you've got a different view in Holland, I hope. I'm sure the industries might be common, but you're definitely engaged on the ground, I think.
Yeah, the industries are exactly the same as Eva mentioned, of course. But what I always say, you can divide the economy in, I think, very easy in some major parts. And the industries which are influenced very much are in the last part. It's the part where people spend their money. So as long as manufacturing industry and facilitating industries and government and healthcare, etc., goes on, the effects in the end to the economy can be not that much as everybody expected, perhaps. Apart from individual cases, of course, they can be very nasty. But in overall, economics in Holland are still going on, also like in Germany, because of a lot of money from the government. But in real insolvencies, it's only 1/3 of last year. So a lot of companies are kept alive, which in fact they don't deserve it. And what we see in our Kruger company, we see a lot of restructuring nowadays, but I think it's only 15, perhaps 20%, which is you can see as COVID, Corona, as the real element of it. The other 80% we would have had otherwise also. And what you see is that manufacturing industry is also influenced very much, especially when there's a combination with oil and gas. course, that's another subject which is going down very fast, but it's now coming up again. So we'll see what happens.
Certainly insolvencies seem to be down throughout Europe, and we've got the same in UK. David, you've got a perspective that hopefully is both UK and Europe.
Yeah, I mean, I certainly would agree with Eva and Case about the obvious sectors that are impacted. And similarly, in the UK, we have massive levels of government support. And of course, the interesting thing is going to be what happens when when the businesses have to be weaned off that support. In the UK, that's scheduled for around about sort of September, October time. I think interestingly, there are some important differences in sectors. With some are going to gradually return, I think, to something similar to what went before. Others where there's real disruption, much of which was happening anyway, and it's just accelerated through the pandemic, that will leave sectors permanently changed. So, I mean, at relatively small end of the market, I think many bars and restaurants will return to something near normal. Some that are focused on office, where there's a lot of office space, may not be, as people continue to work from home. Events will be an interesting sector. That was shut down very quickly, pivoted to online. Witness the fact we're all here today. And it's actually had some benefits. It's allowed people to attend events from further afield without having to travel. So I've taken part recently in a number of events with North American chapters and so on of TMA. I think in the future, there's going to be a mix of events. But what the impact will be on event organisers and those who've traditionally provided large event spaces remains to be seen. Manufacturing industry is perhaps one of my favourites. I had most of my career in the automotive industry. Supply chains were already changing before COVID came along. China is no longer as cheap as it used to be, and having stuff on the high seas for 6 weeks did bring its problems. So those changes were starting. The pandemic has just, accelerated probably 5 years of change into one. And then again, the background of electrification gathering pace, the green agenda, other technological changes, cars becoming semi-autonomous. There's just a huge amount going on there. And the implications for the supply chain will be very, very far reaching. I mean, some businesses will find they have very little market left. And I think there's going to be a lot of turnaround and restructuring work in that sector, and similarly in aerospace. So that's very much an area to look out for, I think.
Very interesting. And I think before we look at sort of, what might be done to fix some of these, just sticking with the overall market, certainly this lack of insolvency is fascinating, because it would suggest there's a sort of a degree of almost pregnancy in the market, and I think classically any recession is normally defined by the emergence of recession is when the insolvencies kick in. So it's almost the lack of insolvencies suggests that no one can see what they're restructuring into, this sort of lack of uncertainty for the future. Because when you restructure, as Eva was talking about with the travel business, you don't really know what you're restructuring for, because if you're going to continue losing money, are you restructuring for trade as it is at the moment? But of course, we need some level of business, and I can see there's the sort of those that have existing trade. In case, I think you're talking about manufacturing businesses, government, pharmaceuticals, all doing well, and then David's talking about the retail, the restaurant businesses that have a real problem. Restructuring a restaurant business, what do? Restructuring it to stay closed down for a while. Are you prepared to sort of give a prediction? Because I think the different industries are going to come back differently. We've invested in, for instance, outdoor event industries, and expecting them to be opening this summer. not online events, but music festivals and things like that. But we can't see hotels returning for some time. And so are you prepared to sort of be slightly granular about the different industries when they might come back? So Eva, perhaps you can.
Oh, sure. So yes, it's very difficult to see when this comeback will happen. So at the moment we look at the companies, and as you said, there's a need of business, but there's a lack of business at the moment. So the first step is always to figure out a financial solution. So how long can this company survive with no business? So last year in March, we talked about put them in a kind of hibernating. Now there's a new word. We're talking about a sleeping beauty sleep to put them in and waiting for the moment when the prince comes up and kiss them awake from this beauty sleeping sleep. This is very difficult, and we see on the other side, we have a suspension till end of April for filing for insolvencies. So this helps these companies who are hit by the pandemic. But the big question is what happens when we are in April and end of April, and some of them has to file, and we have not the comeback of the business.
So David, we see and talk quite a lot about zombie companies in UK, which I think sort of Eva's alluding to. Although I prefer the idea of them being sleeping beauties, but this zombie issue is a major one because I think a lot of the businesses in UK that have needed to survive based on some level of support have spent the money, and we've just seen that Richard Branson has had to put another $100 million into Virgin to prop that up, presumably in the hope that market will come back before it needs any more money or completely runs out. And this cash imperative is an issue. I'm wondering whether, David, do we see lots of companies that are going to survive but not be able to afford to come back to work, to re-emerge, to restock? This over-trading problem must be a huge one that no one's talking about.
Yeah, absolutely. I think, coming out of this is going to be far harder than going in was. And you're right, many companies have survived by government support and perhaps quite importantly, unwinding their working capital position, which then makes it very difficult when they've got to restart. They haven't got that working capital there anymore. And I think there is a real danger that we might create more zombie companies. I don't think, to be honest, we dealt with the zombies from the 2008-9 financial crisis, really. There's still far too many of them around. So it is going to be tough. I actually think that, the lack of insolvencies, people are expecting something of a tidal wave once things start to reopen. You've only got to look in the UK at the London market. All the insolvency firms have been hiring. Read any sort of trade magazine, the lawyers, it's the list of people moving firms is just never ending. There's a sort of merry-go-round going on there as everybody positions for these insolvencies. But I actually think we're going to see firms, businesses coming out of this going straight to liquidation. There is not going to be the ability to turn around firms where there is just no cash, and especially if there are questions over their viability in the longer term. And many of those assets may not be particularly attractive to distressed investors or trade buyers, anybody else. So I think we are actually going to see a bit of a wave of liquidations, and I'd actually think that's probably a good thing. I think we actually do need a bit of a clear out. I think we need to see the dead wood swept away so that the viable businesses can survive.
Certainly, David, in previous recessions, we've talked, there's been talk about the concept of recycling assets and debt, but it generally relies on an investment or a lending market to fund the new, albeit more efficient buyers of that debt. Case, we've heard about sleeping beauties and zombies. What do you have in Holland?
In Holland, I agree with David. What you can expect is that we have only 1/3 of the normal insolvencies, so they will come in the next coming 1.5 years, I think. So there will be a house of very fast insolvencies, but most of them are relatively small. When you look at the companies who have a deferral on taxes, and in Holland it's I have the statistics here in front of me, but in Holland there's only 20% of the companies which is bigger than 250 employees has unpaid taxes now, and every company has the opportunity to do it. So it's only 20% who does it, and from the smaller companies it's only 10%. So, and that's the spending part of the economy again. And what you see is that there are a lot of companies who have a lot of money nowadays because they didn't have to pay taxes. So they don't use the normal bank credit lines. They don't use every other money. They just have a lot on their bank account on the credit side. So what you can expect is that those companies who have too much money now from the government, they can pay the taxes whenever they have to, and they have to do it in 3 years in Holland. And the other ones who has spent the taxes they didn't pay, they are going to be very bankrupt. And that's what's going to happen. And between them are a lot of so-called zombie companies, but when they had to pay the taxes, they would have already been bankrupt.
So interesting enough. So actually, it does sound like Holland has cracked the ability to fund the emergence from the pandemic, because in UK, the deadline for repaying taxes, mainly there was a deferral provision, is the end of this month, March. But what you're saying is that the companies in Holland have built up cash by not paying taxes. And that because they've got 3 years, they've actually got the cash to fund the emergence from the pandemic. Eva, in Germany, where is the cash going to come from to fund business as it comes out of this pandemic?
That's a good question. So we have, as I already pointed out, a lot of special loans for this Corona crisis. The banks did really a lot for helping the companies to come through this crisis. But nevertheless, for example, we advised a company last spring, a year ago. And for this company, there was a possibility to receive a lot of money via a Corona loan. But in the end, the board decided to do this not, because the intention was, if I will receive all such loans, maybe I come in a other crisis that I'm over indebted in a few years. So in the end, you have to pay back these loans. And the balance sheet would change then. You have a lot of loans on your balance sheet. So the board decided not to use the loans, but doing the restructuring in an insolvency, in a protective field insolvency. So this was quite interesting, because many business, the decision is to take all that cheap money. And in the end, I assume they did not really think about the repayment.
So instead of taking the cheap money and paying creditors, they just did a restructuring and abandoned the creditors. I'm sure the creditors had something to say about that.
They were not so happy, maybe. Yes.
David, I'm not seeing anyone coming to me saying, "Can you stuff the creditors?" Sounds like a brutal approach. They've all taken the money.
Yeah. No, I've not seen people trying to stuff the creditors. I think there are some statistics in the UK that suggest that quite a lot of businesses that have taken government guaranteed loans of various sorts are actually still sitting on quite a lot of that money. I suspect they're probably the larger ones rather than the smaller businesses, but where they've just grabbed it anyway as a fallback. It means they are covered if they need it. But yeah, I think it's going to be interesting. I think the banks are going to be interesting, or these government-backed loans are going to be very interesting when they become repayable, and when people start to default on payments, can't make it. I mean, my understanding, there hasn't been a lot of information about it, is that the UK banks have put together a panel, for want of a better word, of debt collection firms who they're going to outsource most of this work to, rather than rebuilding their workout teams. So that's going to be an interesting dynamic. I think they think it makes more sense, and I'm sure they view it as putting a little bit of a gap between them and the actual interface with the customer, so that they perhaps don't risk so much in reputational issues. But how those debt collectors are going to work, I don't know. And whether they have even the remotest experience of a restructuring, I don't know. I suspect not. So we may actually find that one of the skills we need going forward is going to be educating those people in how a turnaround works.
I think that neatly brings us on to the next topic we want to talk about, which is turnaround strategies, because the financial crisis 2008 to 10 was characterized by extend and pretend. And I remember everyone in this sort of forum in 2008 was expecting a wave of insolvencies. Indeed, we were talking earlier about the number of insolvency practitioners who are building up their teams, despite the fact that a couple of major firms have just sold off their restructuring teams. But there is a recruitment going on. But I'm hearing stories of a number of insolvency firms that are struggling because they haven't got the work, despite the anticipation of a wall or a wave of restructuring. And therefore, is there a sort of a wishful thinking going on, in that if it didn't happen after the last recession, and back to my recycling of debt, if there's going to be more extend and pretend, if there's going to be much more government intervention to manage and massage the statistics to keep the numbers of insolvencies down, is it going to be turnaround that's needed? Is it going to be insolvency? What are the turnaround strategies, and who are going to be the main stakeholders that we should be engaging with? I see the impact of COVID-19 changing the drivers of many of these turnarounds, but there are new classes of creditors we don't normally see, and the supply chains are likely to be fractured. Case, perhaps you can share your views on how this time turnaround might be different.
I think it will be very different. And when it only will be COVID-19 results, then I think I think it will go on in a fairly normal way, the economy. When there comes something together with rising interest, etc., or a war somewhere on the world, it can change very quickly. But when the rest of the world stays relatively normal, I think it will be relatively not that big a crisis. Of course, you can expect very big insolvencies. For instance, the KLM in Holland, for instance, Lufthansa in Germany. That's possible when they can't be rescued anymore by the government. But the spending part of the economy can start very quickly and very easy. Then you talk about hospitality, about events, about leisure, about travel industry. Of course, there will be some insolvencies, but they will be very quick. I fully agree with David. And then you can't do anything because the money isn't there anymore, and that's it. But all those kind of companies can start very easy. When you have a production facility or a manufacturing industry going bankrupt, then it's not easy to start it again. But to start a hotel again, it's very easy. And to start events again, it's very easy. So I think it won't be that big a mess as everybody thinks.
And do you see the stakeholders changing? Will there be supply chains where parts of the supply chain, I mean, at the moment, we're seeing a rise in the value of commodities. And so some parts of the supply chain would appear to be doing well, but others really are struggling.
Yes, of course. Supply chain will change, but that will cost years. So you can't do that in a week. So that will be 2, 3, 4, 5 years before you change the supply chain in the way you want it. And that will happen, of course, it will happen. But that can also be a support for the European industry, because it comes back then from China, from everywhere. And it can be very positive for us, the change in supply chain.
So David,
and the new stakeholders, what are very important new stakeholders in Holland, and I think it's the same in other countries in Europe, but not that much. In Holland, the government will be very, very important. There will be elections these days. Then we are going to the left wing again. And so they think the government can do anything, and it does everything at this moment. They're talking about 4 or 5 years paying back deferred taxes. They're talking about discounts on taxes. They're talking about how can we help all those companies. So the government will be very important, and the other very important party are the credit insurance companies, because they are guaranteed by the government. In Holland, I don't know if that's the same in England or in Germany, but they are guaranteed by the government nowadays. It ends end of June, perhaps it will be longer. But when the credit insurance companies will see all those balance sheets with negative equity, which is allowed in Holland, then they will stop giving limits on them. So they can be the trigger for bigger problems. But in Holland, I think the government will foresee that and do something about it in time. So
certainly in UK, I've seen a withdrawal of credit insurance, and I suppose the challenge for us as turnaround managers is, what level do we engage with government? David, you and I spend a lot of time dealing with HMRC. We've got obviously preference and things like that now. How do you see the strategies and the stakeholders changing this time, and are there obvious conclusions we can draw?
I think it's going to be interesting where we've got new stakeholders. The bank situation I just mentioned, if there is a panel of debt collectors, that's going to be a new dynamic. HMRC is likely to be, the tax authority is likely to be more involved, because we have a new law now where they get preference in a insolvency, which they didn't before. That changes the intercreditor dynamics. I think at the larger businesses, we're going to see distressed investors getting in there, buying debt, loan to own strategies, that sort of thing. Again, that very much depends on who the investor is, as to what their desire is, why they've done it, what their plan is, as to how that can be negotiated with. I think at the smaller end of the market as well, we're going to see some interesting dynamics. I mean, if you're a small owner-managed business and you are over indebted, there may well be, they've already started pushing back the time for repayment of these government guaranteed loans. There'll be help. But I think one of the interesting things is going to be, do you actually want to spend the next however many years in a small business effectively working for the government or the bank, whichever way you want to look at it, but rather than working for yourself? And I think there's a lot of small businesses are going to say no. And then it becomes interesting. Do they just sell out if they can? Do they pre-pack the business through an insolvency process and just restart? There's a lot of things that could be done. We don't know how easy it might be to restructure debt in very small businesses. It's in larger businesses, the numbers are normally so big that it's easy to see how there's a benefit to the lenders. that may not be so easy with small businesses. So I think there's a lot of dynamics at play, and I don't actually, I don't have an answer. I don't think any of us do, as to how that's actually going to play out.
I think certainly in UK, and I don't know if it's the same in Germany either, but in UK, I think a lot of the government-backed loans have been used to repay personally guaranteed loans. And a reason for a lot of the restructuring that didn't take place in the last crisis was because of those guarantees. And so while David and I might agree, why wouldn't the directors of companies restructure their company so they're no longer working for the lender, the reality for many of them was they were working to avoid crystallizing a personal guarantee. That might change if they are no longer giving a personal guarantee and they see the benefit of a restructuring that abandons debt, like you were saying, Eva, and they can then work for themselves. However, I wonder if there is a dynamic that's also changing in that the last financial crisis, the banks didn't want to take the hit and the government didn't want to take the hit and write off money. This time round, because the banks have lent money that's guaranteed by the government, it's the banks that are driving insolvency so they can reclaim their loans from the government. So Eva, are you seeing any shifts that you might infer what might happen in the near future?
So here in Germany, the banks are still the main stakeholders, and at the moment they preferred what we called a soft landing, so no wave of insolvencies and not producing a mass of NPLs. This is what the German banks at the moment try to do, and they prefer it. On the other side, you must see we have elections in September. So the government is not in favor to see a wave of insolvencies. And we nevertheless, we have very from regularity requirements in Germany for the banks. So maybe they are forced to sell off, to dispose critical loans at a very early stage in time. But we see not quite the investors at the moment. They are asking, many investors, even from UK, ask to buy loans from the banks. But at the moment, the banks in Germany didn't want to sell these loans. But in the end, we all think this amend and extend what we see in 2008 and 2009 would not work here because there's so much overload on debts on the balance sheet. And the question at the moment is, we have since January a new restructuring law. The question is if maybe with this law you can negotiate haircuts with the state guaranteed loans, so that you maybe try to cut off this huge amount of the state guaranteed loans in a restructuring.
I can see, because what must be in conflict in Germany, which we don't have in UK, and I don't know about Holland, is this obligation to file where a consensual restructuring might be on the grounds of a better outcome, providing we can trade out. And certainly I think for those of us who are interested in turnaround, consensual restructuring is often a preferred route.
Yes, it's the same in Germany. So our plan A is to have a consensual restructuring. Plan B is now this new restructuring law, only fits for a small for a cluster of cases. And plan C is then using insolvency.
Before we come on to sort of the sources of work and how we might be looking for it and might share some of our views for others who might be looking to find the turnaround work. There's a question from Harry de Jager. I hope that's right, Harry de Jager, or Jaeger. I'm sure, Case, you might know him. He's talking about the longer lead times for in the manufacturing interest, and I'm thinking of the sort of the supply chain due to very much logistics options is what disruption that he's talking about. He's suggesting that this might impact. He also wants to talk about the banks, will they continue supporting companies for longer? Are you prepared, Case, to sort of talk about it in terms of that lengthening of the supply chain and what impact that's likely to have on the manufacturing industries that largely haven't been impacted?
Well, I don't know if the supply chain will become longer in time. I think it will be. I think it can go from 6 weeks to 3 months from China to Europe, from 3 weeks within Europe. So the lead times for financing those supply chain and those orders will become lower instead of bigger. And to start it all again, it can be temporarily be bigger, of course, because everybody has to start again. But it's only for, I think, only a month or something, or 2 months. And banks are willing for, of course, it's always the same story. Banks are willing to finance that for healthy companies. But what you see in Holland, that the companies who are impacted by COVID, most of them are not healthy companies anymore. So, and the banks have their own balance sheet. They are responsible for it. So I think people who think they can get a lot of money and are very impacted by COVID, that they won't get it. So you have to try it by another way.
I mean, it does lead, and David, I'm just going to ask you in a second, it does lead this issue of the elephant in the room. You know, we've all been talking about COVID, and I'm sure many governments have been delighted that COVID has concealed a lot of the huge problems that were building up in the system before COVID hit us. But inflation has got to be an elephant in the room, you know, and will that impact interest rates? Because I'm seeing costs hugely increasing. The cost for me to bring in a container from China has gone from 1,500 quid to £8,000 at the moment. And look at commodity prices. So the supply chain is not only going to be impacted by disruption and delays, but also some massive cost increases, which will, I have to assume, translate into inflation. David, do you share my view? No one's talking about it.
I mean, broadly, yes. I think it's that there is going to be some inflation. Things are, you know, have gone up in price, commodities particularly. You can't get away from that. But it's I think, as Kay said, though, what we are going to see is some, you know, perhaps more rapid than we think restructuring of supply chains. You know, there was already a lot of activity, you know, talk about reshoring things or bringing them back closer to home, at least before COVID. And, you know, I think we might see some of that accelerated. So, bringing stuff into a range where it can be, you know, the delivery time is measured in days rather than weeks or months, could make a big difference. And, you know, it could mean some very tough decisions and a fair bit of disruption, but, you know, it could happen. And I think, as far as the question is concerned about the banks, they certainly in the UK, I think we see them being fairly supportive at the moment. As Kay said, you know, they're supportive where they can see a good, viable business. How long that will last, at what point do they consider a business to be no longer viable, is a moot point. You know, if they really are heavily indebted and margins are being squeezed, how are they going to ever repay that debt?
Well, I can certainly see UK banks pulling the plug just to claim under their government guarantee. So, Eva, yeah. in Germany, is inflation, not discussed in polite society, or is it now actually something that's on the table?
Yes, it's on the table because people are worried about these huge amounts, which are for loans which have a state guarantee, and the amounts which come from the bank. There's too much money in the market at the moment, and nobody knows if we overcome this pandemic, how we will start in all this business. And what I personally saw last week, it's a new company I advise. First, at the first glance, we thought, oh, it's in the automotive sector, and it's an automotive supplier for the big OEMs. And at the first glance, we thought they were hit by Corona, the typical one. They received a state-guaranteed loan in last summer, but now, as we dive a little bit deeper, we saw they are the typical problems you see in manufacturing. So this is a restructuring case besides Corona. And I'm quite convinced that we have here in Germany a lot of companies who are in a restructuring crisis, but everything is, yes, they need money, they receive money, so these problems come not really up at the moment. And the question is, what happens if you cannot identify such companies, and then in 1 or 2 years they come up and they are near liquidation then?
So can we spend the last 10 minutes sort of almost moving that theme on to looking at, you know, where the work might come from? I've got a couple of questions here. One from Simon Jones about, you know, the work and will it be insolvency, or will it be restructuring, or will it be turnaround? And I think what you're suggesting, Eva, is that actually the companies that are really going to need help are those that had a problem pre-COVID, where the stimulus has sort of just masked the problem. So Eva, you know, what are you doing to find work at the moment, or is it just coming to you in waves that you don't need to look?
No, it's not just coming to us. So we did a lot of discussions, networking in the market with the banks, with lawyers and accountants who advise companies to hear and to receive at the really early point in time, in the sense of a pre-warning system, to hear from the market what happens there, and could this be an opportunity for us to jump in? But in the end, I must say, we never, or not never, but they are not the cases that an owner of a company calls us and says, I saw on the internet you are helpful in my crisis now. So in the most case, it comes from the banks, from lawyers, other accountants, and consultants.
So Case, do you rely on bank referrals, professional referrals, or the directors coming direct to you? That's your marketing strategy.
Our marketing strategy is very simple, just doing good work. But our recommendations come from everywhere. So we are still busy, and we will stay busy, always have been busy. And work comes from banks, of course, but not that much at this moment. It comes from a lot of people we've learned to know in the last 32 years we exist. So supervisory boards, tax authorities by coincidence, all the private equity, not to forget, comes from everywhere.
And do the directors contact you themselves? Because Ava's not hearing the directors calling.
No, we seldom hear the directors directly. They have to be stimulated to call us, and then they call us.
The stimulation being having their debt called in or something like that.
Yeah, something like that.
So you like the High Court enforcement officers or the bailiffs and sheriffs?
Yeah, of course.
It used to be called ambulance chasing, I think. So David, in UK, you know, we certainly don't get tax authorities referring work to us.
No, no. I think, I mean, yeah, generally we're much the same. Our most work comes by referral, and a very wide, can come from anywhere. And, I mean, in particular for us, because we do quite a lot of international work, we get referrals from, quite often from other countries. So recently we've extricated, effected an orderly withdrawal from a UK subsidiary for a French company. We're talking to a German company about the similar exercise where they just want out, want the most expedient way, but without any reputational damage. So international referrals are quite important to us. And, that's again where EACTP and TMA come in big time. I mean, we probably get a quarter to a third of our work from the USA. And a lot of that, some of that relates to our history as being used to be an American firm. We've, got a lot of contacts out there, but it does come from everywhere. Lawyers, some lenders, investors, all sorts of people. And I think as turnaround people, we have to keep banging the drum and pushing the message that we are able to add value in these situations and demonstrate it. Case studies being a great way of doing so, and actually educate people that, there is an alternative to insolvency, and it can preserve a lot of value if it's done right.
Well, the three of you have just completely torpedoed our marketing strategy, because we still think that marketing to directors is worth doing. But I completely echo your points about how difficult it is to get directors to speak with us. And I think as an industry, we share this notion of frustration that so few directors come and actually talk about their problems early. So to wrap up, two sort of final questions, one from Simon Jones and one from Leon Labovich. Really, it's this question about, is this going to be a wave of insolvencies, closing down businesses, possibly recycling debt? Is it going to be restructuring of those debts and possibly with compromising it, or is it going to be turnaround with much more consensual? So perhaps, in the last minute, in a word almost, insolvency, restructuring, or turnaround. Eva, what do you think?
I hope it's turnaround.
So consensual, but
Yes.
but you've got the problem of the requirement in Germany for filing.
Yes.
Case, what about you?
There'll be restructuring and a lot of insolvency.
I think there's going to be a lot. Yeah, David, finally.
I think it'll be a mix of all. I think, as I said earlier, I think there's a good case for many businesses that are really beyond salvation to be liquidated. There will be some recycling of debt and assets, and there'll also be scope for consensual turnarounds. And I look forward to the latter.
Well, Eva, Case, David, thank you very much. Before I finish, I'm going to suggest, Case, you follow up with Dr. Thomas Zubke, who's asked you a personal question, but we're running out of time. I'd like to thank you very much indeed. I'd like to thank EACTP for organising this. Ladies and gentlemen, it's been a pleasure to moderate the panel. Thank you, everyone.
Okay.
Thank you very much.
Thank you very much.
Thank you.
Bye.
Bye.